Pursuant to Internal Revenue Service guidance, be advised that any federal tax advice contained in this program is not intended to be used, and it cannot be used by any person or entity for the purpose of avoiding any tax penalties that may be imposed by the Internal Revenue Service or any other U.S. federal taxing authority or agency, or promoting, marketing, or recommending to another party any transaction or matter addressed in this show. The opinions expressed by the host and the guests are their own and may not be used as authoritative advice. Any use of this material without the written consent of the host is strictly prohibited.
You're listening to the IRS Radio Hour with your host, Attorney Stephen Leahy, on AM 560, The Answer. Tune in every week at 5 for an informative discussion about IRS obligations, credit card debt, mortgage default, collection activity, and how to resolve these legal issues using tax resolution, debt settlement, mortgage loan modification, foreclosure defense, and bankruptcy. Your host is Stephen Leahy, a Chicago attorney and the principal at Oakham Tax Resolution and the law office of Stephen A. Leahy, PC. Stephen is the author of Deal with Your IRS Problems Today. IRS and debt issues are serious, but there is help. There are resolutions. So get ready and take notes during the IRS Radio Hour. And now, here's your host, Attorney Stephen Leahy.
Hello, Chicago, and I am your host, Attorney Stephen Leahy, and this is the IRS Radio Hour, where we help people dealing with IRS problems, audits, levies, liens, garnishments, collections, and payroll tax issues. We also deal with mortgage foreclosures, loan modifications, bankruptcy, and other debt-related issues. So if you have any of these problems, or if you know someone who does, you should call me. And if you should also tell your friends about the show.
That's right. Maybe listening to the show would be a good way to get there. So and if they wanted to call you, how would they get in touch with you?
Well, you can always reach me on my telephone number. It's 312-664-6649. Our website is chicagotaxteam.com. And you can always send us a question at questions@irsradiohour.com. And I want to introduce my co-host, Jim Leahy.
Hello, everybody, and welcome back. If we're here, it must be Sunday at 5 o'clock. Steve is, this is a show about the IRS and financial problems and, debt issues, as I said before. But it's also a local show about, local stuff, politics, news, family. So, we get into, it's important that, as Steve says, it's important that you find a local attorney or someone local who understands the IRS laws and the revenue laws of the state of Illinois.
That's right. But it's more than that, because I think a lot of times when people have IRS problems, they're also dealing with some other issues, such as, might be behind on your mortgage, probably have credit card debt, stuff like that. So you need an attorney that can take a look at your overall situation.
So why don't you get them on your website so that they can send questions to you? Where would they send it?
Again, it's chicagotaxteam.com. There is you can fill out a form there and send me an email, or you can email me at questions@irsradiohour.com.
Is there am I correct in assuming that they could probably listen to the show on the website, couldn't they?
Well, there is, and we put up if you go to chicagotaxteam.com, on the top menu bar, there is a IRS Radio Hour link, and the IRS Radio Hour link has all the podcasts, so if you have any questions, you can always go there, and we have a little synopsis, little comment, synopsis, summary. Of what we talked about in that show. So if you have an issue, we're not talking about it today, chances are we've talked about it in the past. And if we haven't talked about it in the past and we didn't talk about it today, then you should send me a question. I'm always encouraging people to send me questions, and we'll feature it here on the show at questions@irsradiohour.com.
Well, it's kind of like this week, didn't you say that somebody contacted you and it wasn't about financial stuff? So,
that's right.
I mean, don't be afraid to... If you have a question, a legal question, and you think just contact you.
That's right, because I want you. We have a attorney-listener relationship, and you should contact me if you have any questions. If you got hurt, if there's an accident, if there's anything, because it's hard to know who to contact, who's a good attorney.
That's true,
and that's what we try to do. We got to try to help everybody. Okay, so what's happened in the news this week, Jim? Well, before we talk about this week, let's talk about last week.
Well, last week we talked a little bit about D-Day. We talked a little bit about...
we did talk about D-Day, and after the show last week, Jim and I watched a show on the History Channel, not Pawn Stars or anything like that. This was actually a history show on the History Channel. Amazing.
It was amazing.
And it talked about D-Day. They followed some old guys around. I shouldn't say they were.
No, well, think about it. I mean, anybody who was there, since it was 70 years ago, even if you were 12, you would be...
So they had,
it'd be 82. So they
had first-person interviews with a number of gentlemen who were there, and it's amazing. They talked about what the original plan was, and then what actually happened, which was way different than the original plan. But just hearing those gentlemen talk about their experience was amazing.
Yeah, and most of them had never talked about it until the end. It's the way it always was when we were. The funny thing was is watching them grow up. Well, as we were growing up, they were the ones that you looked to, and. God bless them. As we said, they deserve everything that we promised them, and which is why that's such a scandal at the VA. But there's something else we'll talk. That's another thing we talked about last week.
Well, one of the gentlemen that they interviewed on that show talked about that. He said, I've never talked about this my whole life. I never talked about my kids, but now he's taken it upon himself to bring this to a forefront.
Yeah, we were lucky enough to have an uncle that. Went through Africa and started in 1941 and came back in 1945. And
I don't know if he thought he was lucky.
Well, he was lucky enough to make it back,
no, that's true.
Which was important. And we had him sit down with our kids, probably, 2002? And he sat down and we thought we had recorded everything, but it turned out that the video didn't turn out, so it was horrible. But
in those days, we used tape.
Yeah, and I wish we would have. Captured it, but we didn't. But it was important that the kids were sitting with him, so. Again, it's our history, and you just never let it be forgotten.
That's right. And last week, we also talked about the trust fund recovery penalty.
Yes, we did. That was your blog.
941 taxes.
And then our continuing ongoing saga with the IRS that we talk about, as Steve calls it, as the IRS turns.
That's right. We talked about how the IRS in the state of Illinois can impute income to you based on all algorithms and some other purchases that you may have made, and they try to guess how much you've made and then impute taxes on those. Well, let's
talk about this week, Steve. Saturday was the Army's 239th birthday. So happy birthday, United States Army. Today being Sunday at 5:00. It's Father's Day. So
it is Father's Day, and happy Father's Day to everybody out there.
Happy Father's Day to everybody. It's a great family day. Say hello to my wife and kids. I wish our father was around to say
and he's
happy
not
Father's
here.
Day there, too. So we'll say it now. Happy Father's Day, Dad.
Happy Father's Day.
And my sister told me to make sure I said hello to her when I was at Nicholas's birthday last week, so we'll say hello to her. She's not a father.
But she's quite a mother.
She's a mother, I'll tell you that. And our mother. So this week we're going to go into, as I said, we got a little bit more of the ongoing.
But I want to mention, because always on Father's Day, I always attend the DYBA, which is a Deerfield Youth Baseball. They have a wooden bat tournament every Father's Day, and my kids play baseball, and we go to the wooden bat. It's an amazing tournament because the kids use wooden bats. And
there's a whole different sound of wooden bats, isn't it?
It is a whole different sound. And the scores, instead of being 14-13, are like 3-2. The pitching is awesome.
well, so then, we'll look forward to seeing that I guess that's going on right now as we speak.
That is. The finals are today.
Yeah, the finals are today. So good luck to all those kids out there.
So what are we going to talk about this week, Jim?
Well, we're going to talk about a little bit of the IRS stuff. We have a little...
Well, that's what we talk about all the time.
Well, our ongoing saga, as we say, the senators who were named last week, we're going to rename them again so that people keep their names.
And there's new.
Of course, there's new information every week. And as we said last week, thank God for this because it gives us a lot of filler for our IRS part of the show.
And we're going to talk about my blog this week.
Yeah, and your blog entry is what?
Is can I reduce what the IRS says I owe them? So we'll talk a little bit about that.
I can't wait for that because I was just going to ask, can I? And so we'll just ask. And then there's a listener question. And that question is, what does Chapter 7 mean? So we'll get into what Chapter 7 is, what the different chapters are.
Maybe a little bit how it works.
And stuff. And we'll probably get back into a little bit more of the Well, maybe a little bit more news at the end if there's time, and then we'll talk about what we're going to do.
What else we didn't mention is that on Tuesday, the IRS passed a taxpayer bill of rights. So we're going to talk a little bit about that if we have some time today.
Well, the taxpayer bill of rights, which is, of course, just a list of things that it's already been there, but they're just trying to do some PR damage. Or some damage control, as they say.
That's right. So the IRS says, well, these are the rights you've always had, so we're just writing them down now.
That's right. Well, we have our own Peter Roscom here from around who's claimed some credit, and at least having them stand up and take that. So, we got a busy show this week.
We do.
We have a lot to talk about, and I look forward to hearing it here on The Answer.
AM 560, The Answer, and I am attorney Stephen Leahy.
And how could they contact you, Stephen?
They call me at 312-664-6649. Visit the website at chicagotaxteam.com or send me a question.
See you on the other side.
Welcome back to the IRS Radio Hour with attorney Stephen Leahy. Stephen has helped hundreds of Chicagoans recover from financial disaster, and he wants to help you and your family. There are resolutions, and you will hear about all those resolutions during today's informative discussion on the IRS Radio Hour on AM 560 The Answer. Now, here's your host, attorney Stephen Leahy.
And welcome back. I am your host, attorney Stephen Leahy, and this is the IRS Radio Hour. Jim, what are we going to talk about this segment?
Well, this is, I bet this is the blog entry. I was over on the webpage and reading the blog, your blog entry this weekend.
Mm-hmm. And you can always, listeners can always go to the blog, and it's at chicagotaxteam.com. There's a menu item for our blog, and feel free to go there. I try to add things every week. We have different videos there about different tax issues. Again, installment agreements, what those are. On and on and on about different questions that you might have. They're answered there. So go to the blog and find your answer.
On practically every radio station in town, you hear these commercials for other people who are doing this tax, helping you reduce your taxes and what you owe, and they always say, they give stories that someone owed $400,000 and it turns out that the IRS sent them a check. Or sent them a check or something. I mean, so they make it seem as though, that's what you do, that they're going to come to you and it doesn't matter how much they owe or whatever happens. You're going to knock down how much you owe the IRS.
Well, that's always the first question. That's the blog post is can my IRS debt be reduced?
Mm-hmm.
And
can it?
That's almost always the first question that people ask when I sit down and talk to them. Can you reduce how much I owe the IRS? And the answer is, sometimes. So not always. You can't always reduce it if you have to think about it, because, if I'm paying my taxes on time and, I have to pay them, and then if I don't file and I haven't paid on time, I mean, is it really fair that you're going to not pay taxes? The answer is the IRS doesn't think it's fair. And so they're not going to not let you pay taxes if you can. And that's the same answer with a lot of things. If you're having problems, financial problems, there's ways to get around where you could stop the collection action. But specifically what you're talking about, where you hear these stories where I owed the IRS hundreds of thousands of dollars, mm-hmm. and it turned out that that they paid me. And the answer is it does happen, and it's happened in my office on quite a few occasions. And usually what's surrounding this is what they call, it really applies to non-filers. So a non-filer, someone hasn't filed tax returns for some years. And so what happens if I don't file my tax returns, the IRS will file my returns for me. And these are what they call a substitute for returns. The IRS calls them an SFR. And these substitute for returns, they don't give you any deductions. So, for instance, when I do my taxes at the end of the year, I say what my adjusted gross income is, and then I have deductions. I have home mortgage deductions. I might have some deductions for the kids. I might have some deductions for expenses.
Earned income tax credits, things like that.
And when they do this for me, when they do my tax return for me, I don't get those deductions. So what I owe so when I get a notice from the IRS about how much I owe, there's this huge number. And it scares everybody, the daylights out of everybody who gets this. This can't be true. I didn't make this much money. How can I owe this much to the IRS? And so again, what you want to do is you want to become a filer, which means go back and file your back taxes, and you can replace those SFRs with your actual tax return. So,
is there a time limit on that, or is there?
There's not a time limit, and that's one of the problems with not filing your own taxes is that some of the time limits, like what we talked about, I think in previous shows, we talked about the statute of limitations and how long it is that the IRS can collect. And this goes back to the 1996 Taxpayer Bill of Rights that the Congress passed. Now, we're going to talk a little bit about that later in the show about the Taxpayer Bill of Rights, because there's some news about that. And we're going to talk about that. But I have a great example. In my office, we had a client who came to us who owed the IRS more than $200,000. And she hadn't filed taxes in some years. And what we did, first we do an investigation. Always in every case, you got to do an investigation, pull the transcripts, find out what they made, find out what the IRS says that they owe and why they say they owe it. And then you go back and you redo the tax forms. And so in this case, and usually the SFRs, or the substitute for returns, are completed by the IRS if you have some important economic event that happened in those years. So in this case, there was a home that was sold. So she sold her house and then she bought a new house. Well, when you sell the house, you receive money from the sale of the house. And on your regular tax reform return, you would deduct what the basis of the house was. So if I bought a house for $600,000 and I sold it for $610,000, well, I'd have a $10,000 gain. And there's some tax protections for home gains, but if they're doing the SFR for you, if they do your taxes for you, you don't get those deductions. And so the IRS imputes that you made $600,000 that year that you actually didn't make. And so then they tax you on that $600,000. So in this case, we went back and we did all of the back tax returns. I believe it was 9 years. And at the end of it all, she had some return. She had a refund coming back and a substantial refund, because she was a W-2 employee, which means they were taking money out of her pay every month or every paycheck. And she wasn't filing her tax returns, so she didn't get any of that money back. So it looked like she owed $200,000 when in fact she didn't owe $200,000. They owed her money. So that happens, and it happens a lot. But that's generally, again, a non-filer. There's other ways to reduce what you owe, and we'll talk about those in future shows, because they deserve more time than we have here. But I'll mention them a little bit. We'll talk about abatement of penalties. So the IRS has a process where you can go through the abatement. So if I don't file my taxes on time or I don't pay on time, then they assess penalties against me. And if they assess these penalties against me, sometimes if I have what they call a reasonable cause, I can get those reduced or eliminated. And when I eliminate the penalties, that reduces the interest that I owe. And so then I owe the IRS a lot less money. And then there's other ways where maybe I can't reduce what I owe the IRS. Sometimes I tell people I may not be able to reduce what you owe the IRS, but sometimes I can reduce what you pay the IRS. And there's different ways to do this. One way is what we talked a little bit about. This is called the currently not collectible status. And you pair that up with the statute of limitations. And so if I'm currently not collectible for some years and the statute of limitations is ticking away, then maybe I don't pay the IRS all that I owe them. And then the tax is eliminated because of the statute of limitations.
Well, so these other companies that are all over the radio making it seem as though this is the norm, are kind of leading people away. So the first time they walk into your office, they think that they're just, everybody thinks that, hey, let's just, well, why do I have to pay it all? How much can you get me off? So that
So I have people, again, many of my clients are higher income people. And so they come to see me and they get a bill from the IRS and can we settle for $10,000? And, that's not the way the IRS settles. And this is what they call the offer and compromise. And I think this is another misleading ad when they talk about this, because some people, true, if I don't have any hope of making money in the future and I owe the IRS lots of money, and I've had clients who owed the state of Illinois and the IRS lots of money, hundreds of thousands of dollars, and we settled for $100 or $200. But this is really someone who is destitute, will never be able to pay the IRS or the state of Illinois again. And it's clear that they'll never be able to pay, so they'll settle the debt for a lot less. But if I'm a higher income person and I owe the IRS money and I want to settle, it's, again, you don't just go, hey, could you settle for $10,000? And the IRS says no. And you say, can you do it for $12,000? And the IRS says no. There's an investigation that takes place, and they look at all of your assets, what your income is, what your expenses are. And a lot of times, again, it's not your real expenses, it's what they allow you. So if you're making a lot of money, the chances of you paying the IRS a lot less than you owe them, not real good. And people are disappointed when I tell them that, but that's just the fact. But we do work really hard. A lot of times the IRS is wrong when they assess what you owe anyway.
No, I couldn't believe that. Well, if someone has any of these questions, how would they get in touch with you?
Well, you should call me at 312-664-6649. And you can call, I want to talk about Bonnie because Bonnie is my scheduler, and she always schedules appointments. So if you have a question, call Bonnie at 312-664-6649. She'll set up a time for us to talk. You can visit our website at chicagotaxteam.com. What are we going to talk about next, Jim?
Well, the next thing we're going to talk about, we're going to get into our IRS saga. So we'll
join
see
us
on
at
the other
end.
side.
You're listening to the IRS Radio Hour with attorney Stephen Leahy on AM 560, The Answer. Attorney Stephen Leahy brings his passion and expertise to your radio each and every week during the IRS Radio Hour. Tune in, take notes, and be educated. Learn your options resolving financial obstacles that face so many. And now, back to the IRS Radio Hour with your host, attorney Stephen Leahy.
Welcome back to the IRS Radio Hour, and I am your host, attorney Stephen Leahy. We are here every Sunday at 5 o'clock on AM 560, The Answer.
Yes, we are. Now we're getting to our regular section, and it is our the ongoing saga of the IRS, or as Steve likes to call it,
As the IRS Turns.
Where'd that come from? Boy, we're getting standing to this show. This is production values, boy. So this week...
Well, let's talk about last week first.
Oh, last week? Okay. I have a list. I want to keep these names fresh in people's minds to remind them that there are senators who knowingly are using the power of government to try to suppress people from expressing their political views.
Now, you mentioned before, Jim, that I am a local attorney.
Yes, you are.
And so I grew up here in Chicago, Cook County, and I can't believe that politicians would use the power of government to further their own careers.
Oh, yes, I know. It's tough to believe here living in Cook County here when everybody, every lever of government is controlled by your committeeman. Mm-hmm. But as we were talking last week, I want to keep these. There are 9 senators who were asked to be brought up on charges. And this is to they filed a complaint with the Senate Ethics Committee. And the senators are our own Senator Durbin, Senator Levin, Senator Schumer, Senator Al Franken, Senator Sheehan, Senator Udall, Senator Whitehouse, Senator Bennett, and Senator Merkel. And these are all for targeting private groups and citizens. And I want to remind people these people should be held responsible for their actions. They knowingly have thwarted the law, and they're thumbing their nose at it. Now, on this week, it seems that what we have here is that the FBI was sent the records of these very same people, the people who were the 501c3s and 3c4s, illegally, of course, because these agencies are not allowed to share this information, and this financial information is supposed to be kept private. And so,
the FBI has turned over a large database of taxpayer information that they received from the Internal Revenue Service.
And they admit to receiving it.
They do admit. But you know what, Jim? They don't admit that they ever looked at it.
I get it. We just didn't look at it. And I wonder why they didn't look at it, because they knew it was illegal to look at?
Well, I think that My own opinion is I think they probably looked at it, but
Well,
they can't admit that they looked at it because that would be illegal. But isn't it just illegal just to to have them send it to you?
Of course it is. They're not allowed to do that. So the fact is that you have the IRS now working with a branch of government that are an investigative branch of government. When the IRS has its own investigators, it has its own police force practically. So why is it that they're sharing this information? Whether you like the Tea Parties or the Patriots or whether you like them or not, the fact is that if it happens to them, this could happen to anybody. There are rules in place for a reason.
I like the quote though, because this was James Carney. It was the FBI investigators. He said that the FBI didn't examine the database. The only thing that was done was analysts looked at the table of contents.
I see that.
And that was 1.1 million pages of data of 501c3 and C4 groups.
And people have to remember, they were asking these people what books they were reading. Mm-hmm. They were asking these people who were giving them money. Who's giving you money? Mm-hmm. What books are you reading? What is it? What's in your literature that you're handing out?
What are you talking about at your meetings?
Yes, what do you talk about at your meetings? This is
But this is the IRS gone wild.
That's exactly right. Which is why in the 90s they had the Congress came in, and I believe we're going to talk about this again, but I mean, in the 90s, the Congress came in, and they had people coming up giving these horror stories, and they actually tried to put the reins on the IRS, and they came out with another Bill of Rights. I think the first one was the Taxpayer Bill of Rights in 1988, and then in 1996,
you're right.
When the Congress switched for the first time in 40 years, the Republicans took over, and they finally told people that you were innocent until proven guilty, which is not the way it was with the IRS.
I don't believe it is the way it is now.
Yeah, we're trying to look into that, and that will be another probably oncoming saga.
It was the 1996 Taxpayer Bill of Rights who really created the industry, which is the tax resolution industry, and which is where I help people now. Because there wasn't such a thing as an offer and compromise or installment agreements or anything like that. It was the Wild West of the IRS.
So if people think that this doesn't affect your lives, believe me, this affects your lives. And the IRS having the reins pulled in on them is important.
And there's those that want to go back to that day where they didn't have these problems.
Evidently, they allowed them to go back. So
that's right.
That's why it's important that you listen to this show every Sunday night at 5 o'clock on AM 560, The Answer. And
that's when you have questions, always call me, 312-664-6649.
Or the website?
Go to my website, chicagotaxteam.com, or you can send us a question. I always want to hear your questions at IRSradiohour.com.
And we just want to keep reminding people this. We do this because you have to know your rights. If you don't know them, you lose them. See you on the other side.
Welcome back to the IRS Radio Hour with attorney Stephen Leahy. Stephen has helped hundreds of Chicagoans recover from financial disaster, and he wants to help you and your family. There are resolutions, and you will hear about all those resolutions during today's informative discussion on the IRS Radio Hour on AM 560 The Answer. Now, here's your host, attorney Stephen Leahy.
And welcome back. I am your host, attorney Stephen Leahy, and I'm here with my co-host, Jim Leahy. And we're here talking about IRS issues. But sometimes we talk about other issues, and because people who have IRS problems often have some other problems. And so we have a question this week. What's the question this week, Jim?
Well, our listener question this week is, what does Chapter 7 mean?
Well, we hear a lot about that, people say, well, Chapter 7, the reason why they call it a Chapter 7 is because if you think of the bankruptcy code as a book, and like every other book, it's divided into chapters. And that's why you hear so much about a Chapter 7 or a Chapter 13 or a Chapter 11 or a Chapter 12. Or more recently, we hear about a Chapter 9. And a Chapter 9 is a municipal bankruptcy. So Detroit is in a Chapter 9. Those cities in California, those are Chapter 9s. And there's different rules for different situations.
Well, this one was the question of Chapter 7.
Okay, so the title, so again, it's a book. It's the bankruptcy code, and Chapter 7 of that book is titled liquidation. And so what happens under a Chapter 7 liquidation is all your assets above a certain level of exemptions allowed by law are taken and sold. And then the proceeds of that sale are used to pay your creditors all or a portion of what their claims are. Now, in a vast majority of cases, there aren't any assets above that level of exemptions allowed by law.
Which is why you went bankrupt.
Well, you can go bankrupt. The companies go bankrupt, so companies can file a Chapter 7. Mm-hmm. And I help companies file Chapter 7. And some companies have assets when they go under. They just can't pay their bills, but they might have an inventory or they might own some property. And if the company goes under Chapter 7, then a trustee is named, and the trustee takes possession of that property and then has a sale. And they gather that money into a pool, and then the creditors of that company will file a claim. Mm-hmm. And then the claims are paid according to how much money they can the trustee can produce with the assets. So again, you use the assets to pay off the creditors. Most individuals, again, a vast majority of individuals won't have any money left if they over and above the exemptions. And so they really don't lose anything. But most of their debts are going to be discharged in a Chapter 7 bankruptcy. And a discharge is when it's a court order that relieves you of the obligation to pay these debts. So the debts still are out there, but you just don't have to pay them. You don't have that legal obligation to pay them. Now, there's a couple of different steps to Chapter 7. The first step is you file a petition with the court. The petition itself comes in 4 different or 5 different sections, depending on what your income is. The first section is just general information, your name, your address, your Social Security number, things like that. The second section is really the heart of the filing, and these are what they call schedules. So there's schedules A through J. So you list what your real estate is, if you own any real estate. You list what your property is. So I have a car, I have some property, I have some furniture, I might have some bank accounts. You list it all, what you owe. You list who your creditors are. You list if you have any executory contracts, so a contract might be a lease or something like that. You list what your income is, and then you list what your expenses are. The third section is called the Statement of Financial Affairs, and in the Statement of Financial Affairs, you answer some questions, such as, do you have a safe deposit box? Have you given any large gifts away? Have you transferred any property to anybody else? What's really going on here is the trustee and the court is looking to see, have you been shifting your assets around? Are you trying to cheat your creditors out of something? And almost always the answer is no. Nobody's trying to cheat anybody. And then the fourth section is what they call a statement of intentions. And the statement of intentions has to do with secured debt, like a mortgage, a home mortgage, or a car payment. And then you list what your intentions are when it comes to those debts. So if I have a car that I'm paying for, and I can't afford it anymore, I can give the car back. And once I give the car back, they can't come after me for the deficiency, which they can if I don't file bankruptcy. So if my car is repossessed, I still might owe them, I almost always do, owe them some more money. So they're going to come after me and sue me for that money. But under Chapter 7 bankruptcy, I can give them the car back and be done with it. You can also reaffirm the debt, which means if I'm paying on the car, I can keep paying on the car and keep the car. So the second step is what they call the automatic stay. And the automatic stay is the order from the court that prevents your creditors from coming against you. So if someone's suing you, they have to stop. If someone's harassing you on the phone, that can't go on. They can't generally even send you letters anymore. So it gives you this blanket protection from your creditors.
And that helps when you're in the middle of trouble. So
that's right.
I mean, the fact is, so what you're saying is, that's not, it's up to, which is why they come to you to decide what's better for them.
That's right. And you don't know if Chapter 7, Chapter 13, or if any bankruptcy is right for you anyway. Now, I got to the second step. The third step is what they call the 341 meeting, and we'll talk about that later. And then the fourth step is the discharge, and that's the order from the court that relieves you of that obligation. So it takes about 5 months for the whole process. But remember, you get most of the protection right up to the day that you file.
And how could they find out if they need this protection?
So if creditors are harassing you, you should call my office, 312-664-6649. Visit my website at chicagotaxteam.com or listen here every Sunday at 5 o'clock on AM 560, The Answer.
And you can answer their questions for them?
That's right. Or send me a question at questions@irsradiohour.com.
We look forward to seeing you on the other side.
That's right.
You're listening to the IRS Radio Hour with attorney Stephen Leahy on AM 560, The Answer. Attorney Stephen Leahy brings his passion and expertise to your radio each and every week during the IRS Radio Hour. Tune in, take notes, and be educated. Learn your options resolving financial obstacles that face so many. And now, back to the IRS Radio Hour with your host, attorney Stephen Leahy.
Welcome back. We are here on AM 560, The Answer, and this is the IRS Radio Hour.
Welcome back, everybody. Now, Steve, I think we'd be
remiss.
We would be remiss if we didn't get back to those last two. I know we were kind of short in the last one, but
I didn't want to hurry through it because it's important. We talked about the first thing, which was file the petition, and the second thing was to the automatic stay, which is what everybody, that's the protection order from the court. Mm-hmm. And I want to mention that that automatic stay is a very powerful tool if I owe the IRS money, because the IRS can levy things against me, take my paycheck and take everything from me. And sometimes the best way to stop the IRS from doing that and save me, and I have a good story for that, but we'll talk about that next week, is to file for protection under the bankruptcy laws, because the only thing that's stronger than the IRS is the courts, is the United States court system, the federal court system. So the third thing is what they call the 341 meeting, and it's called the 341 meeting because of the section of the bankruptcy code, section 341, that calls for this meeting of creditors. And this is the only time you get together with anybody besides your attorney. And at this meeting, you meet with the trustee who asks you questions about that petition. And then 60 to 90 days from that 341 meeting, that's when you receive the discharge. And again, the discharge is the order from the court signed by a judge that relieves you of the obligation to make these payments to these creditors.
Okay. And so then we'll go into the...
Well, let's talk. Let me just talk about the different chapters, because we talked about Chapter 7 being liquidation, and Chapter 9, I told you, was municipal bankruptcies. Chapter 11 is, the title of Chapter 11 is reorganization under the bankruptcy code, generally used by companies. So United Airlines here in Chicago went through bankruptcy. Individuals can go through bankruptcy if they have a higher income or if they owe a lot more money than a normal family would, then they can't. And the other one is Chapter 12. Chapter 12 is for family farmers. And then Chapter 13, which is a very popular here in Chicago, and that's called the adjustment of debt for individuals with regular income. And so these are the different chapters that are available to people for protection.
And so how would they know what chapter that applies to them? They would have to what?
Well, that's important because some people can't. We talked about this, I think, a little bit before about qualifying. That for Chapter 7, it's really overcoming a presumption of abuse under Chapter 7 if I have a higher income. So, but let's see, we'll talk about a little bit about that in future shows, and we'll talk about Chapter 13 in a different show. But right now, I wanted to, we want to talk about what we're going to talk about next week, or try to, first of all, before we do that, I want to wish everybody a happy Father's Day.
Happy Father's Day. That's true.
It's important. Again, our father's not here anymore, but we do remember him this day. I hope my kids remember me this day.
And so, as we do every week, we will have our listener questions. We will have our ongoing. I'm sure that the IRS won't let us down, and they will give us way more issues to be speaking of. Mm-hmm. We won't allow you to forget that. We were going to find out. What happened with the
we didn't talk about the IRS Bill of Rights, but we'll talk about that next time.
That's right.
Because I think it's important. We spend a lot of time on that, or more time than we have.
Yeah, we did look into it and found out in '96 they passed it. We can't find out why it went away. So by next week we'll know. And next week, Sunday at 5:00 on AM 560, the answer, you'll find out with us.
So if you can't listen to the show on 5 o'clock on Sundays, you can go to our website at chicagotaxteam.com. There's a menu section there that says IRS Radio Hour. You can also visit 560theanswer.com. It's there on their website also.
Is there a phone number?
There is a phone number, 312-664-6649. Thanks for listening. Look forward to hear you. I want to thank Debbie.
See you next week.